you. This is Abhijeet here once again from Pinnacle. We did not get much time in the afternoon to connect with you. So I'm back with our segment Market Talks. I hope you have been updated in our Telegram channel where we have been providing regular updates. So we even gave you the update of exiting the Nifty long position that we had tried in the morning. On your screen you can clearly see the chart of Nifty. So I'm just switching to the 15-minute time frame, and if you now just remember and recall, we had taken a long call at somewhere around this was the point where we had tried some long positions, but this after this rejection candle things did not move the way we wanted, and in around 1 hour, so which is at this candle, we hit the stop loss and finally market threw us out of the trade. And I hope all of you took the stop loss there, because if you don't take the stop loss, you have to, it's something we say that if you are not ready to take a small loss, market will give you a big loss. Be ready to take a big loss. So this was the case here, and you can see from that point we saw the market dipping by more than 200 points, and you can clearly see the zones that we have been marking regularly. Market found once again came and stopped in the exact same zone from where it bounced last day. But once again, if you ask me, I'll just look at the daily candle, and all I can say is the daily candle does not look good at all. Does not look good at all. This kind of big red candle, it's just not good. It's just not good. God knows what will happen, because if you see, after a long time, we have closed below 200 SMA. So the last time when we closed below 200 SMA was 28th April 2025, when we were finally able to conquer that. And the last time when this actually happened, where 200 SMA failed to hold, was 7th of January 2025. Coincidentally, it's been exactly 1 year and something like 15 days after that we have once again closed below the 200 SMA. The markets have been continuously consolidating for last almost like 1.5 years. We have not had any kind of decent gains. You can see this almost 550 calendar days market has been playing around the same level, plus minus few points. So this thing was not good. 2 days we managed to defend the 200 SMA, but not today. So market structure now still remains sell on rise. We did anticipate a bounce today, but it did not happen, especially after 2 good days of closing where we closed higher than the previous day. So but it did not work out. So now one thing is very clear: 25,000 is the support. All of us have been talking about the budget. There are many people talking about the budget. I don't know what the budget holds, but and nobody knows. But definitely there must be something in the budget that the market is fearing, and the easiest thing that I can think of is something like LTCG. People are talking about removing LTCG, but if you ask me, I don't see any reason why the government will remove LTCG. In fact, I might even think that the government is thinking about raising the LTCG to even 15%. Because if you see 12.5%, raising from 10 to 12.5% does not make any sense. So maybe the government has plans of raising 2.5% in 2 phases, and that is why this reaction. So now the next support that I see in the market is only here, 24,600. This is one support, And then see, I'm not using any indicator here, all simple levels, 24,400. These are the two levels that I would be looking forward to, 24,600. And if these don't hold, I don't know where we will stop. Anything can happen. Market may even go down back to something like 22,000 kind of levels. This is not to put fear in your minds, and that is for the same reason I have been saying this thing from from this day, from 6th January onwards, that wherever your stop loss is being hit, don't be afraid to take your stop loss. Don't stick to stocks. Don't marry your stocks. So maintain that. The only respite right now which we can expect is budget, until and unless the government takes it very seriously, thinks about why the FIIs are exiting the country, why they are selling we need to give something to stay in our country. That's why they are exiting. That someday we will discuss on that. But as of now, the only thing I can see is, if this level goes, 24,600 will be the next stop. Even Reliance, which we were anticipating that 20 monthly average will provide some support, it did not provide any kind of support. But again, Reliance is at a very important support. So let us see if this holds or not. If this does not hold, it will become very difficult for the market to sustain. Let's have a look at Bank Nifty also. Bank Nifty took a major beating, and the most important thing here which happened is this. I'll show you. It broke this support, closed below this support, and not only this was the another support that we had marked. It even broke that support. So clearly, very clearly, bad days ahead. Sell on rise, 58,600, 700, whatever it is. That will be the point where we can enter more shorts. We can keep on adding shorts until one day's impulse will reward us. So that's what the structure looks right now. ICICI Bank also, we can have a look. ICICI Bank. So even this showed enough weakness today. Charts are taking a bit of time to load today. I don't know what's the reason. So no, it held on to the support. It tried to go up, but it held on to the support. And then HDFC Bank, the weakest point, the one who has been dragging the market. Once again, it closed below this, and then here it just came and stopped near the just above the gap region. But again, HDFC Bank, I'm not too much hopeful, since it has broken this 940 kind of support. I'm not too much hopeful on HDFC Bank. Maybe a short-term bounce could be there, but this short-term bounce could be a selling opportunity even today, because back to back, not even one bullish candle. Even today, if you see, it has formed a bearish spinning top kind of candle. So this does not seem very good. So all in all, I can say that all of you need to be very careful in days ahead. You can see what has happened in Sensex post this bearish spinning top. Sensex has formed a bearish spinning top one day before, which was Thursday, and today you can see. So this could be the thing which we could expect there in HDFC Bank. And for Sensex, the next support is 80,000, which is a good 2% down from here. So all I can say is, all of you be very careful. Don't try longs. We did try a long today ourselves, tried to go against the shorter term trend, but again we were ready to take the stop loss. It was a well planned 40-50 point kind of stop loss, and we respected that. Now I also want to review some of the casualties in today market. If you remember, the previous bull market, it started with Adani's, and Adani moving ahead. Even the current fall it is being led by the Adani group. And you can clearly see this kind of formation, the lower tops, and we had clearly discussed that focus on this trend line and stay away from Adani group of stock. This was the point, 1000 rupees, and from 1000 rupees it has gone on to 700 rupees. Won't be surprised if we even go on to below 300, 400. So nothing to touch in the Adani group as of now, not even Adani Energy Solutions. You remember this was the point where we had even asked to exit, and from 1030 it has gone on to 800 level. So again, not a good stock to enter. And the biggest casualties you can see, and I am pretty sure all of you remember this stock, all of you remember my warning where we had told that this line, if it breaks, so this was the point where we had given the warning that if you are invested in any of the Adani stocks, be very, very careful, trail your stop loss, and if not, exit. So if you would not have exited, 11% down today. Another one, Paytm, which we were long few days back, and then we had told after 2-3 bad days that this you need to avoid this, and then you can see the result today that we fell by nearly 9.5%. So which is like we were 4 or 5% up at one point of time, and then it's something like 15 or 16% down. So again, this kind of big candle, stay away. Something is just not good in the Indian markets. I am not bothered about any other market. All I care is our market where we have our own investors. So you should remain cautious. Don't put your money anywhere. Don't be in a hurry. Just have patience. 623 Syngene fell by 8%, and then another one, Adani Ports. This was the stock. So just see how simple trend lines work. This was the trend line which we had made in our live class. Or again, I have this habit of saying class. It was just our YouTube live where we had made this line and had told that below this it would be bad. And now we are just stuck somewhere here. If this goes, you could see another major downside. So again, abstain from this. Then Poonawalla FinCorp, you can see this Poonawalla FinCorp. Today also we showed the warning that stay clear from this stock. I won't be surprised if this stock loses 50-60% from here. Eternal 275 was the clear warning. We saw the stock falling in front of our eyes yesterday and even today. So Eternal definitely not a stock to have in your portfolio right now. Then Adani Total Gas. Adani Total Gas, you can once again see it has broken the trend line here, discussed here. Adani, another Adani stock which we need to refrain from. This was the point. We had issued a clear warning. Then Hudco is one such stock which has again broken this one. I don't think you all need anybody. If you have in your portfolio, very, very clearly this was the leader in the previous bull run, Housing and Urban Development Corporation Limited. This is a company based in Jamshedpur. We know this company. So abstain from this right now. It has broken this support, and I don't know if it may even lose something like 50 or 60% from here. So clearly stay away from this Hudco. And Ambuja Cement, another Adani Group stock. It has broken down, and not only you can stay away from this, but this is also a shorting opportunity. This very, very clearly, I'll repeat again, this is also a shorting opportunity. You can short this stock and make some money out of it whenever it rises. Then we have Godrej Properties. We had clearly mentioned we had expected some recovery here in this zone, but once it started to get out of this, we had clearly told to exit from this. And you can see if you have not exited, you have already lost 25%, and I won't be surprised if it loses another 25% from here. So Lodha, this one also, all of you might be remembering this support line. So again, so market is just not looking good. No point looking at all the stocks, all the casualties. Even you can see this Interglobe Aviation. There might this fall, the fall which you saw here, this fall was the reason of whatever was the reason. But I won't be surprised if it loses another 10-15% in next few days. So my suggestion to all of you, please, please, please stay safe. Stop loss is being hit. You must exit. Even GMR Airport, which we had a long-term hold, we had made it very, very clear that there is no such thing as long-term. If your stop loss is getting hit, you must exit. Below 97.98, GMR Airport was an exit. If you did not exit there, exit anywhere, 1 or 2 rupees up or down, doesn't matter. Save your money. Just remember that you should live to trade another day. So I hope my warning is very, very clear. I would suggest all of you to listen and watch the stocks and even whatever I am saying very, very carefully, and try to follow it, because whatever I am doing, whatever I am sharing, this is all out of my personal experience of last many years. So this is for your good. I'm not going to get any benefit out of this, but if always remember, a rupee saved is a rupee earned. So if you are able to save a rupee here, maybe next time when the market starts to rise, it forms a base, gives a credible bounce, you can get into good stocks. This is all I can say. So friends, thank you for watching. Do leave a comment and do like the video and share with your